Hi, Fresh Capital listeners. For those of you who are new to the show, the aim of the game is for Albert and I to pitch the business case of a company to each other, work out what we like and dislike, and if we're lucky, conclude if it's a company we're interested in. A reminder, this is not a recommendation or financial advice. This is a way for Albert and I to have fun applying what we've learned about investing from our careers and life. Always do your own research, always make your own decisions, and consult a financial advisor before you jump in. Welcome to the first episode of Fresh Capital. Every week, we evaluate growing companies that are misunderstood or overlooked. My name is Dan, and I'm joined by my good friend, Albert. Albert, how are you going?
I'm going well, Dan. Thank you. How are you going?
Good. So this is a podcast that we're starting as two friends based in Sydney. I'm a lawyer. Albert is a consultant or ex-consultant now in a startup. Is there any other way you'd describe yourself, Albert?
No, I think that's perfect. Ex-consultant, but now working at an early stage SaaS company, servicing businesses in Australia and overseas.
Okay, I didn't ask you to read out your LinkedIn, Albert, but I think that gives the listeners a good idea. So today we're going to be talking about Xero. So that's our company of choice today. Do you want to start us off by telling the listeners what Xero is, what it does, and what makes it one of the up-and-coming SaaS companies in Australia?
Yeah, of course. Let's jump right into it. So Xero is a SaaS technology company. So SaaS is subscription as a service. So Xero predominantly sells what they call cloud-based accounting software targeting small to medium enterprises or business. So started in 2006 in New Zealand and has grown to be one of the largest technology companies that's been listed on the ASX. So that's the Australian Stock Exchange. And so what Xero really aims to do, and I guess broadly the problem that Xero tries to solve, is that they enable small to medium enterprises to have an accurate and real-time view of their own financial situation. So if you're thinking about how a person manages their business and all the kind of moving parts to a small business, such as, managing your staff, payroll, inventories, chasing up invoices, trying to reconcile different bank statements, and so forth. Xero helps small business owners do this through a cloud-based platform. And so kind of diving into Xero as a business, it's hard to decouple Xero as a accounting business from Xero as a SaaS or software as a service business. So I think, Dan, what do you think about kind of diving into SaaS as a good intro first, and then talking about how attractive Xero can be as a investment to begin with?
I think that's the perfect place to start. And one thing that I wanted to touch on, maybe actually to start off with, is what makes it different, which, as you said, was the fact that it's a cloud-based accounting software. So some of our listeners might be familiar with MyOb or QuickBooks or some other forms of accounting software. Excel spreadsheets were one often used back in the day. But the real differentiating factor for Xero is that it's one of the first cloud-based accounting software systems. So how about you dive into that, Albert?
Yeah, absolutely. So back in 2006, Xero went public, or 2007, and they actually went public as the first cloud-based accounting software. So historically, software has been installed either on a computer or a server that you can access. So if you think about, old school style CD-ROMs, you put the CD-ROM into your computer, the installation wizard comes up, you press enter, or, you download the installer from a computer or a website. That was historically what they call now on-premise software. Now what Xero is cloud-based, which means all those steps of trying to install software through a CD or downloading an installation wizard no longer exists. You just log onto the Xero website, log in using your account, and you've got all the functionality of the software without having going through all those steps. I guess a really good example of this is if you're a software vendor, you can quickly deploy software to all these customers without having to go to someone's house, install the software yourself, or give them a CD for them to install. And so this is now a very common business model for technology companies, whereby they offer their software in a SaaS model, and customers pay a small subscription fee in return for access to the software or a license to use and distribute the software across their employees. And so kind of thinking about that lens of subscription versus premise software, the main advantages, and this is advantages that Xero gets to enjoy because it's a SaaS business, is that, the software scales very well. They can deploy it to new customers very easily. The software is very affordable. So instead of charging a big upfront fee for the software, they charge, smaller monthly or annual fees. It also then creates what we call stickiness to a customer. So stickiness means the customer is more likely to keep using it or returning to the product. So because the customer can only access the software through the subscription fee through the cloud, they have to keep paying the fee in order to keep using the software. And generally speaking, SaaS business models deliver higher financial margins, just because all the upfront costs of trying to install the software or trying to pay people to install software for you no longer exist. So does that give you a good kind of breakdown, Dan, of what SaaS is?
It's a great breakdown, and my mind went to when you're talking about installing things from CD-ROMs. If you can remember back in the day, you would get a CD-ROM with Microsoft Office on it, and you would plug it into your computer, install it, and then next year or the couple of years after, when Microsoft 2010 comes out, you'd have to buy a new CD-ROM to plug it in and install.
Yes.
And cloud-based software, it completely does away with that. And it goes to what you said about a stickiness, where you're signed up to it. Any updates to the software automatically happen, and you don't have to buy a new CD-ROM or anything like that. All those steps are removed, which means it's more likely that you're going to stick as a customer and continue the service. But one of the words you mentioned there, which has been really important for me when looking at this, and maybe this is where we can get a bit more argumentative, Albert, because for listeners there, we chatted a little bit beforehand. Albert's quite bullish on Xero. I've got my doubts. So if I can direct the conversation this way, Albert, I've got doubts that the Xero subscribers, are going to keep going up, particularly in key markets. What do you have to say about that?
Yeah, so I can understand the bearish sentiment, Dan. A lot of people are quite skeptical of technology companies, especially public ones, because they tend not to have great profit margins. But let's talk about Xero's ability to acquire and penetrate new customers. So just eyeballing Xero's customer growth in the past maybe 2 to 3 years, they've grown quite well. So they've grown about 20 to 25% in the key markets they've operated in terms of customer numbers. So
just to stop you there, Albert, for the listeners, we've got, in terms of key markets for Xero, we've got Australia with about 900,000 subscribers, New Zealand with about 400,000 subscribers, UK 600,000, North America 2.5 or 250,000, and then the rest of the world, which I think is about Singapore and South Africa for the most part, 120,000 there. So those are the markets, all up about 2 million, I think, as you're saying, Albert.
Yeah, that's correct. And so when you look at where Xero's customer growth is coming from, they're getting quite strong customer growth from, I'm going to say, their mature market segment. So that's Australia and New Zealand, predominantly because that's where Xero was founded and they first managed to penetrate that market. They're also getting relatively similar customer growth in North America and the UK, where they're growing at around 25 to 30%. Obviously, these are kind of newer markets for Xero, but when you look at this other segment that they've just bucketed as rest of the world, they've actually grown by about 50%. So to answer your question, Dan, as to whether I'm bullish on Xero, and that's driven predominantly by customer growth, I believe that Xero can, continue to improve its customer growth in both the UK and North America, as well as this rest of the world segment. And the kind of two big things that I anchor on to believe that assumption is this first point around the increasing shift to cloud-based accounting. So when I think about this rest of the world segment, and I think about Xero's target market, they're really targeting what they call SMEs, small to medium enterprises. And so just doing a bit of rough research here, the World Bank thinks that market size, is quite large. They estimate of all the businesses in the world that 90% of those businesses are small to medium enterprises. So if we even just take that high level market size for Xero, that obviously presents a really big opportunity. Guess when you couple that opportunity with the increase in digitalization and cloud adoption, especially in emerging markets like India, South Africa, and then other Middle Eastern countries, I think there can be a really big push for a company like Xero to start penetrating these markets as small to medium businesses become increasingly cloud mature or adopt cloud practices. And so to answer your question as to whether I think Xero can sustain this customer growth, absolutely. And I think this customer growth will be predominantly driven by emerging or rest of the world markets, as I like to define. But I'm interested to hear your case, Dan.
Well, I'm actually in agreement with you on that one. So I think a lot of the growth in this last year for Xero has been on the back of, believe it or not, some of the COVID-19 consequences. So a lot of stimulus has been pushed out by governments, and they've increasingly gone online to do that, to help manage the books and help manage those payments. So for example, in Australia, the payments were sent out for JobKeeper directly through the businesses themselves, or to the businesses themselves, who would then pass it on to their employees. And that was all done digitally. And I believe Xero was one of the ones that could actually plug into the stimulus the government was sort of sending out to have a really coherent, one-stop shop for their businesses, for their small, medium-sized businesses to handle that transaction. So I agree. I think there's tailwinds. What my first question though would be, despite those tailwinds, what are we going to do in this economy when businesses start shuttering? Levels of debt are really high. When you're talking about small, medium-sized businesses, I think that we're talking about coffee shops, restaurants, retail. Why do we think that these customers, which are potentially facing, the end of their life cycle for their business, are not going to affect a subscriber count for Xero?
Yeah, that's I see a good argument in terms of thinking about whether there's propensity to spend for accounting services or for software. I think I put back to you that because Xero is incredibly sticky, and looking at some of their churn numbers, for Australia and New Zealand, they're churning at less than 1%. And for, everywhere else, they're churning at less than 2%. And that's incredible. And so once these customers, regardless of their financial situation, come through the door for Xero, they remain, strong and steady on the platform. So despite, all these COVID changes or potential downturns, changes in the operating environment for some of these small to medium enterprises, I think cloud accounting is becoming more important than ever because it lets them actually see how their business is performing in this environment. So because COVID has actually accelerated, poor business performance, the economic shutdown has obviously affected some of these industries you've been talking about, such as retail, cafes, et cetera. Now more than ever do these companies need to have a financial view in real time of their business, and Xero lets them do that.
I think we're in agreement on this one. You've convinced me, Albert. And as I said, I agree. I think there's tailwinds with the cloud-based accounting software. And I agree, stickiness is going to be a key factor for Xero. When you think about what you can do and can't do, or can do without or can't do without in your business, accounting software is one of those sort of non-negotiable ones. You're probably going to have it. Whether you have, speakers, sound system, pretty artwork, all the paraphernalia around, those are things you can do without. I don't think you can say the same about accounting software. But this is my second challenge. If we look into these key markets and we also look at the price for Xero at the moment, which is quite high. I think it's trading at about 140 at the moment. I think that prices in an assumption that there's going to be already all of this growth in subscribers for Xero. It's already pricing in that there's going to be an increasing digitization and increased subscribers because of it. So really the question for me is there going to be such an acceleration of subscribers that it outpaces what people are currently predicting for them? And I'm not sure if I see that particularly in the growth market of North America, where their subscriber base is about 250,000. It's less than the amount of subscribers than they got in New Zealand. And they've got a tough competitor there in QuickBooks, who has pivoted now to cloud-based software as well and has got an incumbency. I think they've got a couple million subscribers already in the North American market alone. So really, I mean, if we're focusing just on that battleground, I don't know if that's one they can win, because as we were talking about before, the whole idea of a SaaS is scalability. But if you can't get those subscribers to swap from another service, you're not going to scale up to be that size where you're going to be generating the profits at the level that you want.
Yeah, I actually absolutely agree with you there. When you think about the North American landscape, it's actually really difficult for Xero, I think, to start to penetrate and take away market share that QuickBooks and other competitors in the US have already gained, especially since Xero is still relatively immature in those markets compared to ANZ. But what you need to believe about Xero and customer growth, and then ultimately the price, is that it's not only going to continue to penetrate, I think they'll continue to improve how they operate as a business. So let's kind of park this idea of customer growth aside, because if Xero don't grow by any new customers in the next year, 5 years, or however many years, and only retain their kind of churn, which is roughly about 1% once you account for both Australia and international customers. That to me is still a very, very attractive business. Looking at their historical financials, they've only improved margin and they've only improved profitability. So last year was the first year that Xero was profitable. And so if you think they can continue to be profitable as a business and continue to improve their margins, which they have in the past, so there's no reason to indicate they can't in the future, then that to me will still drive an increase in the price and valuation of Xero as a business, regardless if Xero fails to net new customers in North America or the UK. So I think when we think about the price of the share and it's trading at around 130, like you said, that's 130 Australian for all our listeners out there. I think that Xero can continue to increase both in price and then valuation as a result of that by just focusing on operational hygiene, which it has and will probably continue to do. Back to this point around, North America. So I look at some of their customer acquisition numbers and their growth. So around 20% growth in the past year in customer numbers. But to me, what's really interesting, and this comes back to Xero, kind of as a SaaS business, where SaaS businesses have very kind of specific kind of metrics. Not only do, investors look at revenue growth, margins, cash flow, but SaaS businesses come with a lot of other metrics. They use this term APRU, which is like annual revenue per user. They also use what they call CAC, that's customer acquisition costs, like how much does it cost to acquire a customer. CAC is actually quite high for customers outside Australia and New Zealand. So when I think about that really high CAC, it's to your point, Dan, around the competitiveness of the US market. They've got to fight Intuit, which owns QuickBooks.
A lot of marketing, a lot of promotion.
Yes. Which then increases, their marketing spend, which could reduce their margin. I look at that as kind of the bear case why Xero may not work and the investment required for Xero to work. But ultimately, I can kind of park that and see that as a business, Xero is becoming more attractive. And even if they can't net new customers in the US, they can still increase their price as they continue to be and grow profitability. But I'm actually really interested to hear, this bear case that you've been alluding to.
You make me sound like I'm the big scary bear.
I mean, it's almost Christmas. You're like the Xero Grinch.
Well, I think my concern really does come down to, and maybe this is both of us born and raised in Australia, but the idea that the world is so much bigger out there, and if you're a big fish in a small pond, the pond being Australia and New Zealand, how legitimate of a company are you? That sounds quite harsh, actually. How legitimate of a global player are you? And when you look at the price of Xero and what their ambitions are, I think it's hard to believe that if they do fall out of the North America, and they are looking promising in the UK, but if we assume that they sort of plateau in the UK and they really just become the dominant player in Australia and New Zealand, is that I don't think that's what's priced into them at the moment. I think everyone believes that they're going to be bigger than Australia and New Zealand. So the bear case is that that's what everyone believes at the moment and what they're investing into. And if they fail to get out of Australia and New Zealand, then naturally, the price is going to drop to reflect that.
Of course. Let's kind of dive into this a bit more, Dan, because it'd be good to understand your assumptions for this bear case. So you're looking at failure to penetrate in these markets or continue to grow at the same rate they're going. But when you look at Xero's actual growth, last year they were growing by 20% new customers in North America and the UK. What makes you think they can't continue or sustain that level of growth in those markets?
Well, a big one is the COVID situation. So in the annual reports, they actually talked about how they slashed a lot of their marketing promotion costs. Usually you'd be attending conferences, sales conventions, those sorts of things to market your product. And that obviously had to stop to a certain extent during COVID. There was no more travel. And I don't know if we've seen the results or the consequences of that, stop in the marketing campaign, if you will, in the subscriber numbers for North America and the UK at the moment. So I'm worried if we're perhaps lagging behind, we'll see those, marketing spend and stuff as an investment, and you see the payment of that down the track when the subscribers come in. Similarly, if you haven't been putting in that market spend or haven't been able to, then you would expect that there might be a bit of a decline in the signups down the track, and that we just haven't seen that yet.
And you're actually right, I think to some extent. So there has been, in the past 6 months, kind of a drop off in their subscriber numbers. So, I'm just looking at their FY21 first half of the year results. The increase year on year from the previous time, H1 2020, they definitely have not been growing at the same rate, probably because of COVID or driven by, the economic shutdown. But I don't necessarily think that, growth will slow down completely in North America, in the UK, in rest of the world, because these numbers still look quite good. So, double-digit growth in customer numbers, double-digit growth in revenue, except for North America. And so, just looking at these numbers alone, I really think there's a strong case for Xero to not only keep increasing its customer numbers, but, their margins. So I'm just challenging you on that assumption around how quickly and how well they can grow in these other markets.
Okay, Albert, you've thrown the gauntlet down, and now I'm going to pull out the big guns. So we talked a little bit about Intuit, which is the company that owns the product called QuickBooks, a direct competitor, essentially very similar product to Xero, and how Xero has sort of failed to capture into its market share over in the North America. Now, here's the flip side of that, Albert, is because Intuit has sort of, let's say for now, won that battle in North America. If they're looking to go further afield into a market like Australia and New Zealand, which is a very similar market to America, as we were talking about, it's got great margins. What's to stop them from coming down under and taking the fight to Xero and taking back some of that market share?
That's a really good question. And I haven't done as much research into Intuit as I would have liked, but I'm going to kind of take a step back first and talk about how you actually develop SaaS software, especially B2B SaaS software. So when you're selling to businesses as a software vendor, the key competitive advantage you have over any other B2B SaaS player in your same market is domain expertise. And so, the CEO and the founder at the time of Xero was an accountant. He'd also sold a software business prior to that. And so he came with him when he first formed Xero, really deep domain knowledge around the New Zealand and then the Australian accounting regulations and the industry. So Intuit, being a predominantly American organization, has a very different set of accounting measures, which they call GAAP. My kind of classical training in an accounting firm has taught me to be really astute about the GAAP, for lack of a better word. And so because they work in a very different system, and there's lots of elements in GAAP that feed into the Australian accounting regulation, which is called the AASB, there are still some differences. And I think because there are some differences, it would be probably a bit difficult for Intuit to really penetrate the Australian market, given how regulations are different for accounting services. So
I think that's a great point. And I think you're starting to win me over a little bit here, Albert. I guess I'm being less forceful here. I'm going to give you an open-ended question to perhaps finish me off. Is this market big enough for two players? And assuming that there are two dominant players here in North America and the United Kingdom, do you still think there's a big runway for Xero?
Yeah, so good question. I think to answer the first part, yes, I think there is more than enough room in the market for two major players. I think when you compare Intuit and Xero, Intuit is kind of, the big brother who's like 18, and Xero is like, the 13 or 12-year-old younger brother who's trying to, get him to buy, him alcohol or something like that. They're just very different scales of businesses. Intuit is like a $7 billion business. Xero is like a $700 million business. So the scale is very different. But yeah, I absolutely agree. There's room for, 2 or 3 major players, especially given how big the market size is. A market size being, the number of small to medium entities. But also, both these companies are really good at acquiring and building new capability. And so they're quite good at increasing the breadth of services they offer and expanding their total market size. So yeah, I definitely think so.
Well, you almost had me convinced, and then you re-instigated a question I had. It was about when we were talking about stickiness and sort of increasing the margins. I was wondering, how much scope is there for Xero to raise the price on their product? It's a subscription-based service. If they're not really adding too many more functions to their package, can they really justify an increase in the subscription price? And if they are adding extra functionality, what are the odds that they're going to put that as like a premium plus package where you pay an extra to get that added functionality, in which case you're not really monetizing your base as much as you could?
Yeah, this is a really, really good question. So, maybe as a small business owner, money is a bit tight, and I'm just, throwing around some generalizations here. So you're probably going to be quite price sensitive to any changes in any platforms you use. So if Xero were to increase their price, even by a little bit, as a small business owner, if you're doing, less than $5 million in revenue or something like that, that is still going to hurt regardless of the price. So I think as Xero looks to scale, build new functionality, they need to balance that with how price sensitive their customers may be. I'm going to say maybe because I'm not actually sure how price sensitive some of these customers are. I'm going to assume they are because of the nature of the business. But given how long Xero has been operating in the market, how quickly they're growing, they're growing by 30%, how many new customers they're getting, despite all this, and still maintaining quite a low churn, I don't necessarily think an increase in price will have that big of an impact on customer numbers.
I guess what you're saying there is that even if you do raise the price and you increase that churn a little bit more, you're still going to come out ahead just based on the numbers that you've got, monetizing that extra amount on the base
absolutely.
that you have.
Absolutely.
Well, I think you've won me over, Albert. I'm looking a little bit more favorably at Xero now than I was coming into this conversation. So we might just call it there before you upsell me on anything else and take my whole wallet. Thank you for listening to Fresh Capital, a podcast about companies misunderstood or overlooked. Click the subscribe and follow button to hear us next week. We look forward to having you again.
Thanks, Dan.
Thanks, Albert.